Evening star signal. The evening star signal gets its name from Venus when the planet rises early in the evening sky. When a stargazer sees Venus, he knows that a long night lies ahead. When a technical trader sees the evening star signal, he knows that the current upward trend for a stock, commodity, or currency is about to change into a downward trend. The signal consists of a long white candle, a short black candle whose bottom lies above the top of the first candle, and then a relatively long black candle that takes away most of the gain seen in the first day of the 3-day evening star signal. The evening star is a technical signal. It tells the trader that a bear market is in the offing, no matter what the underlying cause. Candlestick signals. Japanese candlestick signals have been in use for centuries. They were first used in Japan by rice traders. Today, technical traders of stocks, commodities, and Forex use Japanese candlesticks to identify changes in market sentiment and trade accordingly. One of these signals, the evening star, is a strong reversal signal that foretells the decline of a stock, commodity, or equity price in the coming days, weeks, or months. The evening star signal. The evening star signal is made up of 3 candlesticks. It occurs when there has been a well-defined upward movement of a stock, commodity, or currency. The first of the 3 candlesticks is long and white. This indicates a day in which the equity closed substantially higher than it opened. The second candle is black and sits higher on the chart than the first. This tells us that the equity gapped up to start the trading day and fell just a little by the end of the day. It may have traded higher or lower during the day. That is not important to identifying the signal. The third candlestick is also black and is substantially longer than the first. It must extend down to the level of the lower half of the first candle in the signal in order for the 3 candlesticks to comprise an evening star signal. Bears in charge. The evening star signal tells us that the bears are taking over. Traders have been optimistic as the stock, commodity, or currency has risen. Then, after an especially good day, the market pauses and moves down slightly. This may be only a temporary correction. However, the next trading day moves substantially downward. This tells us that market sentiment is changing and that sellers outnumber buyers. The bears are taking over. When the equity opens with a gap upwards on the second day and a gap downward on the third day, it is an even stronger confirmation that a market reversal is taking place and that one can expect the equity in question to continue moving downward. Although the third day must reach down to the level of the bottom half of the first candle to call this configuration an evening star signal, it can fall more dramatically, which only provides a stronger indication of a substantial market reversal. As always in technical trading, the evening star signal gives us insight into changing market sentiment no matter what fundamentals are at the root of price changes.